Good morning, Wall Street. In this educational video, we're going to talk about the intraday trading yesterday. And it was just too good of an example of some of the things that we've been talking about in past videos. It was just too good of an example to pass up. Kind of a classic way of looking at value lines, the opening ranges that we've talked about recently, and the price pattern called triangles. And our favorites are the ascending and descending triangles. All of these technical indicators came into play yesterday. So let's take a look. What we're seeing here actually is most of Wednesday's close. We've taken out some of the value lines because we're going to add them back just for demonstrative purposes. What we do see here is, of course, the overhead red resistance level and the underlying green support level. Those will come into play a little bit. What we also see is the previous day's last 2-hour high, which is right there for Wednesday's last 2-hour high and Wednesday's last 2-hour low. So we have these two lines in there. So now what we're going to do is, one of the things that we talked about in recent videos is the variety of different opening ranges that one can select from 1 minute to 5 minutes to half an hour to an hour. Basically, you can pick whatever you want. We're going to show you how they progress in terms of handling the way the market opens from a short-term trading point of view. Clearly, this was a huge gap. The interesting thing about the opening gap yesterday, if you followed it, was how it really didn't have any follow-through. Yeah, it was great, it opened up, but it just kind of sat there, and that's how we use the opening range, is to identify where the action is from the point of the opening range. So we have a 1 minute bar. What we're going to do is we're going to add the 1 minute opening range. So there it is, the opening range of the first minute bar. We're just going to click that, hit OK, and there it is. It's these thin, long dashed lines right there. And you can see that it shows you the range of the low for the first minute bar and the high. So now let's see how long the market handled this opening range. Interesting that it's right at this overhead red resistance value line. So let's go forward a little bit. Well, okay. That opening minute candle didn't last more than 2 minutes. And in fact, the market never got back to this level again. So within 3 minutes into the trading with this big gap to the upside, we got a negative bias. You could say, well, okay, it's just an opening minute range. How significant can that be? Well, that's fair. So what do you do next? You go to the opening 5 minute range. We already have established a negative bias. So we're only going to be thinking about taking short sales from here on until we get further indications, right? So we're going to add the 5 minute range. There's our 1 minute range. We're just going to go up and add the 5 minute range, which looks like that, right? So there it is. The upper end of the range, of course, is the same as the 1 minute opening range. Now we have the market coming down to the lower end of the 5 minute range. 1, 2, 3, 4. There's your 5 minute low right there. So let's see how the market handles this opening range. Well, it took another couple of minutes before it broke that. Pretty weak action. You're not 10 minutes into the opening of the market when the market has violated both its 1 minute and 5 minute opening range. So the negative bias starts to loom larger. And if you didn't take a short trade here, you might be thinking about taking a short trade there. So now we come down to this value line, which is the previous day's high right there, and we got a bounce. Pretty good target for these first two negative trades. Remember, this is just for intraday, very short-term trading. So you get a bounce. But what's interesting is the bounce didn't get back to the opening ranges that we saw. Now we want to deal with what the 30-minute opening range might look like. So let's go ahead and add that. Well, the market kept going down. It sliced through the last 2-hour high and the pivot value line. It came right down to the last 2-hour low, just about, and then that's where it scored the 30-minute opening range. So the 30-minute opening range is now from here to here, and you got to bounce back to the pivot level. Then I move back down to test these value lines a little bit harder. So you're getting some interesting action here. So the bias is now negative as far as the 1 minute and 5 minute opening range. It's holding the 30-minute opening range for now, so that might be a glimmer of hope. And in fact, the market did come back. It bounced quite nicely off of that. It moved above the previous day's last 2-hour high, worked on that for a while, and then started to go weak again, and came down to this level. So it's obviously working on this level, and what I'm going to do is I'm going to make this picture a little bit, we're going to zoom out a bit so we can see the pattern that's developing. And it's very interesting. All of these bounces are starting to lose a little bit of magnitude. And one of the patterns that we've talked about in past videos is called the triangle, and our favorites are the ascending and descending triangle. The descending triangle is when you have a whole series of highs that are lower than previous highs. So here we have this line for the descending triangle, and what you want to see is how the market progresses. It's either going to break out of this flat support level, which it keeps coming down and testing this area, and or it's either going to break below this, or it's going to break out above this. And as the pattern develops, it kind of paints itself into a corner. It's going to have to break out one way or the other. So let's see how that happens. One more test of that side of the triangle, and then it broke. And when it broke not only the 30-minute opening range, but also the previous day's last 2-hour low and the green support level. Not too good. In fact, now let's add in the hourly opening range. And that's in there as well. So there's this whole cluster of value lines right there that it broke with this descending triangle. Very interesting move. Now, what about a downside target here? If you take the high from this test of the previous day's last 2-hour high and this low, well, that's at what? It's at 1156.50. Let's call this 1152.25. So we're looking at 4.25 points. Subtract that from 1152.25, you get 1148. And it actually went down to 1147.50. Interesting stuff. And to be able to move with this just by using the value lines and the opening ranges just makes it a little bit easier to do, to understand where you are in the scheme of things. Now it gets a little bit trickier. You're below the green support level, so that's clearly a negative bias, and you get this sort of throw-up type of capitulation. But now let's see what starts to happen. You get a new triangle forming, and that's an ascending triangle, and that tends to be a positive pattern. Let's take a look at how that looks. Okay, so here's our ascending triangle, flat top and rising bottoms. That's generally a bullish pattern, and that got you back up to test that green value line, the support value line, but the odds are that it would test it as resistance, and in fact the market did pause there. Now here's a little bit of reading a little English into this. In a very bad down day, generally when you get back up and you touch this line, the market falls away again and just goes to a lower low really fast. It doesn't give you a lot of time to make a trade in the right direction. And that was the first clue to me anyways during the trading, that it's just not that easy to take, given that much opportunity, to take a short trade right here at this key value line. And you can just imagine that as it came back to test this ascending triangle as support, you can imagine the strings of drool on the parts of the bears that are trading in an intraday to take out this entire pattern here. Well, it came down to this level, and then it started to rally again, and boom, broke back up in a very fast move. All of these traders that took a short position here got stopped out, It worked above this cluster of value lines, and tested as support. That was helpful. And moved above. Now what we have in here is the 10-minute DMA channel on a 1-minute chart. That's always helpful, as didn't talk about that before, but basically when the market moves below that, that's a bad thing, and when it moves above it, that's a good thing. Not too complicated, but for the rest of the day it stayed above that 10-minute DMA channel. I'm not saying that this is easy, but what I am saying is that having these tools do help you gain an edge in terms of moving with the market as it unfolds. Hope that helps. See you next time.